Goodness, Calvin Coffee. There you go. All right, cool. Someone pick a pair. Any pair doesn't really make a difference. Or what we could do is we could go through four different pairs, and I'll do 1 year each because I want to do a total of 4 years. But obviously, this is all going to be on a swing, so it won't take too long. It might, yeah. In total, it might take maybe 30 minutes just to get through an entire year, which isn't too long. It just depends on AU. All right, perfect. There you go. All right, let's start 2020, beginning of 2020. And actually, do you know what? Hold on, someone's mic. Who the fuck is that? I'll just do 4 years on AU, bro. It's just easier. Doesn't really make a difference. All right, cool. I need to add a new one. All right, now how many people we got in there? We got 21. I need someone that is gonna be. I need someone that's gonna be like a timekeeper, right? You're not gonna keep hold of time. But what I want you to do is I want you to write how many times a setup hits an A plus, an A, a B, and a C setup. So I need someone that's gonna stay here till to the end of it. It won't take too long, maybe 30, 40 minutes. Come on. Or if I add some sort of incentive, if you do it, I'll send you guys $20 cash out. Bro, so keep the cash. All right, cool. So who's gonna do it? Let me know. 2 secs. Perfect. I'm relying on you, Ronnie. I'm multitasking. I don't know what that means, bro. Are you gonna do it or you're not gonna do it? Ronnie, I'm relying on you, bro. Let me know. Whilst you're doing that, let me just quickly set my thing up. Let me move that over here. And I think I need to set this up. Yep. So I'm gonna change that to red. All right. Just so you guys know, my red zones are my higher time frame zones, and my blue zones are always the daily zones, which is uh obviously the time frame that we're using for setups. All right. So if you ever see a blue and a red, now you know the difference. That should change. Yep, there we go. So it's working. All right, Ronnie, you're ready. Perfect. Now I will tell you exactly which which category it falls into every single time. Even if I don't take the trade, I still want you to I still want you to. In fact, technically, I don't really need to take the trade in the first place. But the whole point is, I'm just going to show you, even if it means that I don't take the trade and prices fly to TP, it's still valid, right? Because the whole point is of what I'm doing is showing you which ones I would take and which ones actually hit TP and which ones didn't hit TP, or which ones I wouldn't take, and I'll explain why I didn't take them. So really, when it comes to the back testing side of things, I don't really need to enter the trade. I don't. You see at the bottom over here, it says account balance, realized P and L, and all that jazz. I don't need to worry about any of that. Right? It doesn't really make a difference at this point. What I'm trying to show you is where you can categorize um which setups have a higher probability at the very end of it. Right? So again, I'll tell you in the with whatever you're using now, whether it's a pen and paper, whether it's a laptop or whatever, doesn't really make a difference. Just as you've got it now, I need you to write A plus. I need you to write A. I need you to write B. And I also need you to write, I think it's C and D as well, right? Let me double check. Yep. So A plus, A, B, C, and D. That's all I need to write as categories, right? And then let me know when you wrote those down. Just changing. What I miss? You ain't missed nothing yet, bro. Uh, I'm about to go through how to categorize your trades. Ronnie, once you wrote down A, B, C, D, let me know, please, bro, so I can explain to you which ones, what each zone got it. All right, let me know when you're ready, so I can explain to you what in terms of like EMC. Right? Okay, perfect. All right, so as far as I'm concerned, an A plus setup would be, you can just write it down as this. You can just type in 38.2 plus the box. That's an A plus setup, and I'll explain it so you can see it on the chart properly. And then an A setup is just write 61.8. Looking for a pen. All right, perfect. And an A, just a normal A setup would be a 61.8, including the box. And again, I'll explain what that looks like on the charts. A B setup would be a 0.88, including the box. Let me know if you got those down so far. I hope you got it down. And then a C setup would be a 38.2 only. So only 38.2, no box. And then the D setup would be the box only, nothing else. And again, everything I'm telling you right now, I will go through every single one of them because again, we're going to be looking at it and showing you which one has a higher probability of basically number one showing up on the chart, and number two, which one has a higher probability of even hitting your TP. Of course, we're not going to count anything that doesn't hit our TP because those are the ones that we're not going to take for specific reasons. It probably doesn't fit in our category, or sorry, not category, because it doesn't fit in our criteria to even take the positions in the first place. So the ones I'm going to show you now for these categories are the ones that only fit our criteria. If it doesn't fit our criteria, number one, we should not be trading in the first place. Does that make sense? And that's like basic trading 101. Do not trade something that's not in your criteria book in the first place. So anything that looks like an EMC setup and it goes towards TP, if it's not hitting our criteria, we're not taking it. Because in real so what am I saying? In real life, you're not going to take those positions, right? Because it will be even if it goes to TP, it's going to be a fluke. You're not going to take those positions in real life. So we're only taking the ones that fit our criteria. Let me know if you wrote all of those down, Ronnie, so I can move on, please. Perfect, bro. And once again, like I said, everything that I'm telling you now, I will go through it and show you exactly what it is. Now, I use a fractal. You guys don't have to use a fractal, but a fractal just helps me identify highs and lows. It's as simple as that, right? So what I'm going to now look for is I'm going to look for a breaker structure to either the upside or the downside. And I'll go through. In fact, I'm just going to I'm going to play price. I'm going to wait for an EMC setup to occur. I'm going to wait for it to hit TP. And then I'm going to go back and analyze it. And that's how we're going to mark which ones are valid and then which ones also fall into which criteria so you can see word for word. Yeah? Bro, so can you repeat? Bro, just watch the video back. So that's an impulse, as you can see, going down. I didn't see any blows being broken. So immediately, I'm not taking this position. Even if it decides to go towards our TP, I'm not taking that. Right? Cool. That's fine. So really, what I would have wanted to see is I would have wanted to see this low from this fractal here to be broken. As you can see, it pushed down here and then reversed back up. This low wasn't broken, so I would have wanted to see this initial impulse that had broken below pulled back into the box to go lower. It didn't do that, right? And what I'm not doing is counting this as a breaker structure because what you're what you're doing now is trying to catch a reversal, right? You would say, okay, we have an impulse broken to the upside. You left that zone there. You're waiting for price to break below, come back to go lower. You're right, but then again, you need to remember probabilities. What's the likelihood of something like this happening time and time again? It's not very often. I can tell you that for free because I've backtested it so many times. So really, I want to see a low from a continuation to have been broken, right? Not a reversal low. Now, this is actually start from here. So that's an impulse. Correction is a bit too strong. So I definitely want to take this in the first place. Did it go towards TP? It didn't go towards TP before it smashed it, or it smashed it now. So now, this is a low over here. As you can see, hold on. Let me change this color so you don't get confused. Blue is always our setup time frames. So this is your impulse after the blue candle, the white candle. So that's your impulse and that's your correction, right? And then obviously as price plays out. So that's a low. This one didn't get taken out because this was the correction. So then you also have another low, which is from here. I'll change that from here. As you can see, this was the breaker structure to the downside. This one didn't, price didn't close below this low here, which is fine, but it definitely closed below this low, which is also good. So that's your impulse. And then this is your pullback for the correction, which is great. Not only that, if you guys can see, there's also another low right here with another fractal, which is technically part of the very first impulse anyways. If I get rid of the first one, as you can see, what do you see now? If that's a low, this is your break to the downside correction, right? And then that correction also gave you the next impulse to hit LTP. So you have two, right? The first one, this one definitely would have got you in the trade, but it would have stopped you at break even, right? And I know that because price came back up, and I'll show you what it looks like when we're actually entering the trade. Now, since this hit LTP, I already know that this was a that went to the 88. Give me a second. Oh shit. Guys, give me 1 second. Sorry about that. Someone's calling me. Um did this thing just get rid? Yeah. Hold on, I need to save this. I just realized it just got rid of everything I was doing. It literally just got rid of everything I was doing. All right, cool. Well, I already know this low wasn't there, so it was this one here that we were looking at, which is here, right? So that's your impulse and that's your correction. So to mark out the impulse and correction, you start from the high to the low, right? Which is from here to here. And as we can see, as part of the strategy, we need to measure the very first impulse, right? Which is from here to here. And we want to make sure we have two minimum retracement candles. So 1, 2. After the second retracement candle, sorry, not even after the second retracement candle. During the second retracement candle, we also still need price to come back and tap into the 38.2, right? Before it's considered as like a valid position to continue, analyzing or even deciding to take. As we can see from the very first impulse and correction, the first retracement candle didn't touch the 38.2, but also the second one, that's the one that touched the 38.2. So it is valid, number one. Number two, it also pulled back into this structure area, which is the box, Ronnie. That's the box that I'm talking about. So this structure area pulled back into that area there, right? So not only did it do that, it pulled back into the 38.2 and the box. In addition to that, what did it also do? It tapped into the 61.8 as well, right? So now we're getting a deeper retracement. Now, when it taps into the 38.2 and the box, it does have it has a higher probability, right? Once it starts getting a deeper pullback through those fibs, that's when the probability becomes less likely. So the 61.8 is more, can you give a breakdown? I'm not doing that, bro. there's sorry, let me not even be blunt. You don't. So when it comes to the intradays, there's no breakdown with it. It's simply you just follow the strategy and you wait until the very beginning of New York session and you trade it during the first 4 to 6 hours of New York session. There's no breakdown behind it whatsoever. That's why Brian doesn't look at higher time frames with it. Is if it's a win, it's a win. If it's a loss, it's a loss. There's no breakdown with it. There's nothing I can give you. There's no information I can give you about that. Same with Brian. Brian can't give you any information about that, bro. Going back to what I was saying, so that's 68 plus. So that's the 61.8 plus box to mark down. Okay, perfect. So now you can see, right? It's pulled back to the 38.2 and the box, and it's also pulled back to the 61.8 and the box, right? You have to mark it down on both of them because if it stopped at the box, sorry, if it stopped at the 38.2, it would have gone straight to TP. You can see it's pulled back to the 38 and the 61. So you've got to mark them both down at the same time, right? That's just for Ronnie. Anyone listening, don't worry about anything else. That was just for Ronnie specifically. So with this one being said now, technically what we should be doing now, since we've got a second retracement candle, we need to adjust the fib from here to here, right? To where the end of the retracement was. And then all we need to do now is obviously wait for our entry time frame. So we go to the 4 hour time frame and we'll wait for price to break the 61.8. Now, as you can see, price is creating more highs, right? Now, what I wouldn't do is if price breaks above this structure zone or the box on a daily time frame, which is our setup time frame, I wouldn't continue to look at this trade. I would completely miss it, skip it, move on to the next one. Because we're on a 4 hour time frame, this is actually not a close, right? So if I can go to the daily time frame, technically the daily hasn't closed yet because that's going to create another wick. Because price should come back down from here. If I go back to the daily time frame, as you can see, it was a wick that was created, not an actual body candle above there. So now what I'm going to do is I'm going to adjust my fib from here to here, because technically it's still valid, hasn't broken out of structure. Now what I need to do now is, since price created more highs, if I adjust my fib and put it back from to the very beginning of where it was in the first place, which is there, right? Now we're back to measuring the initial impulse before we go back to our entry. As you can see, what has it done? Tapped into the 38.2 and the box. It's tapped into the 61.8 and the box. And it's also gone to the 88, right? So Ronnie, when you're marking this down, you need to put a strike between the 38. So you need to put a strike on A plus. You need to put a strike on A, and you also need to put a strike on B as well, right? Because it's actually filled in all three of those criterias. Let me know once you've done that, bro. Perfect. So since we've got our retracement like that, yes, some would say that this retracement is a bit too strong, but this is where if you separate your what do you call it? Your criteria, and you're like, okay, this is the A plus setup, this is the B setup. I'm only gonna take A plus setups, for example. Let's just say that, right? Then if you get a setup like this, where the retracement pulls all the way to the 88, you already know you are done with this position. You're not even gonna further analyze it. Done, dusted. If it pulled back to the 61.8 and you only want to take A setups, meaning that the second retracement is not even allowed to touch the 61.8, you wouldn't take that. You'd skip it as well, right? So since technically this is still valid, right? Because obviously we saw it go straight to TP. We would adjust our fib again, go down to the 4 hour time frame, and then we would see whether it hit LT. Well, let's see if it actually allowed us to get involved in the trade in the first place. Now, technically, this candle just now was a tiny break below the 61.8, literally by like maybe 1 or 2 pips, right? Tagged in there, and as you can see, well, we got tagged. So this is a tiny break here. We got tagged in here. So our entry would have been directly at the 61.8. Stop loss a few pips above the 88. And then we would have done this. So we would have got that 1 to 3, right? Now at this point, as you can see, we would have moved our stop loss to break even because price went below the 38.2. And then from there, price should come back up, stop us out at break even, I believe. Yep, there. So then if you're taking partials, yes, you would have taken partials. It would have been a no loss, whatever. But then if you guys remember when I said that initial impulse created another low, so it was like two EMCs there. This was the second one. So you have to find structure from the 1 hour and 15, just like the swing setups for initial there okay, there was structure exactly where there was, bro. Let me show you what that looks like. The swing setups are completely different to the intraday setups. You're saying don't you have to find structure? You would have entered directly at the 61.8. The way to identify structure is from the very point of so since we're selling this, from the very top of the fib, which is here, right? See this little dot here? That little dot is in line with this big candle here. That's the very high of that wick. So from this very moment here, as price goes to break the 61.8, you see a bunch of different candles, or sorry, a bunch of different colors, a bunch of different colored candles being formed as it breaks the 61.8 from here. If this candle here is the very top, the very wick of this is blue, do you see other white and blue candles being formed as it breaks the 61.8? Yes or no? There we go. So as soon as you see that, you don't have to try and enter here. You don't have to try and enter over here. You just place your entry at the 61.8, stop loss a few pips above the 88, and exactly when I did that, you can see it's already in line with structure. Yes, my stop loss is not above the high, it doesn't really matter. But don't forget 1 or 4 hour time frame. So all of these candles that you can see, when I drop down to the 1 hour, 15 minutes, for example, there's going to be structure in between. There's going to be another, technically this blue candle here, because this is a 4 hour candle, right? If I go on the 1 hour on the 15 minute, there is going to be a lower high or lower low. There's going to be structure here. So technically, my stop loss is actually above internal structure. That's how you identify whether there's structure being formed on on a swing EMC or not, right? That's how you place it. If, for example, from this very moment here, which we'll probably see anyways, let's just say from this very moment, price just created several white candles, just all white candles as it breaks to 61.8. Then what you would do is you would put your stop loss at the very high of the wick because that was the last high. You would put your entry wherever it needs to be, right? So that you can get a 1 to 3, and then your TP actually still goes to the negative 27. We will see something like that form. So I'll show you when that happens, right? Give me a second. I think Brian's calling me. Bear with me. Bear with me. Bear with me. Bear with me. Let me continue until he answers. Okay, so there's another low here, right? So since we got stopped out the first position, which is fine, there's another low right here. What's up, Nicolay? Is it Nicolay or Nikolai? Because I know it's spelled differently. Uh, Nikolai. Okay, perfect. Yeah, no worries, bro. Um, okay. So since we got stopped out of break even on the other one, right? Technically, this is still another setup over here. Now, with this setup, as you can see, the impulse starts from this white candle here, not from here, the white candle, right? Uh, Bear with me, guys. I'm so sorry. Where's Brian? You guys are so dumb. Where's Brian? I said, where's Brian? I am so sorry, guys. Give me a second. Can you guys hear me? Bro, I'm holding it down for you right now, man. I'm on Zoom right now. I'm holding it down. What you guys saying? You guys okay? You guys are having fun. You guys are having way too much fun. Everyone's saying what's up to you guys. There you go. All right, let me go. I'll call you guys later. Yeah, you see, Brian and them lot are having way too much fun without us right now. Sorry, going back to what I was saying. So we got stopped out breaking with the first one, right? Not a problem. A second one formed literally after we got stopped out. So that when we got stopped out was price actually pushing down here as it tried to go towards our TP, which is obviously the first one here, as you can see, right? And then what did we do? It pulled back, stopped us out. No problem. It is what it is. But then now all we simply need to do is adjust our fib for the second one because we can see there's another one being formed, right? Now with this one running, as you can see, from the very first impulse and correction, price taps into the 38.2 and that same box that I mentioned. So that's one strike against the A plus, right? In fact, before you even put a strike in it, let me make sure this goes to TP. And I believe it will. Yep, it did. Okay, perfect. So that's one strike as it went to A plus because it pulled into the 38.2 and the box as well. Not only that, it pulled into the 38.2 and the 61.8 and the box. So that's a strike against the A, not the A plus, but the A. So A plus and A as well. And then not only that, let's see. As we can see, it didn't get to the 88, right? So that's only two strikes, A plus and A, nothing else, right? So now, as we currently stand, technically A plus has two because if you didn't move your stop loss to break even on the first one, you would still be in the trade because it went straight to TP anyways. A has two as well, same reason, and then B has one because it still went to the TP even though you didn't move the stop loss to break even. But technically, you should have. However, there's going to be traders that don't move their stop loss to break even, so it's 2-2-1 on A plus, A, and B. Right now, a standard, we'll move our fib from here to here, and this might give us that entry that doesn't have structure. Okay, perfect. Who asked me that was Javal. Now, what would you do? Hold on. What would you do now if you got this break here? Where's your entry gonna go? Because you asked me a question about finding structure with your entry. Where would your entry go?
Yo, you hear me?
Yeah, I can hear you, bro.
Okay, bro. So I'd say right at the 0.786, like right
No,
in between.
you don't need to do that, bro. That's what I keep saying because it's not guaranteed for price to pull back all the way down there. Remember, when you're on, stop thinking of this. Don't get mixed up between the swing and the intraday. With the intraday, because you're on a smaller time frame, you're gonna have longer wicks. You're gonna have longer wicks. So the likelihood of you getting stopped out on a smaller time frame is much greater than it would be on a bigger time frame. On a bigger time frame, you're not gonna get that huge of a wick unless there's a new spike. But then on a smaller time frame, when there's longer wicks without a new spike, it's still gonna be long. So then you can only imagine what the new spike is gonna do on a candle on a smaller time frame. It's gonna look massive, which is why when you're on a smaller time frame, right, where your normal entry would be, you don't want to put it there. You would put it a bit further back. right? Because you don't want to suffer from major drawdown. From this very point here, price has created several different colored candles as it goes to break the 61.8. So therefore, even if price decides to come up a little bit here, you're gonna say, oh, every single time, maybe my entry should be here. But then what happens when price doesn't come there and it comes maybe here, right? But then your entry was all the way up here. That means you've missed the trade by a few pips because you wanted to get it smack bang on, like you wanted a sniper entry. You don't need to be having that, right? Don't forget each fib, each fib level is technically an area of structure. And you can see this because when we got the 61.8 over here, what do we see? We see price rejected from this area. We see price rejected from this area. We see price rejected from this area. There's an entire structure over here. This entire area structure, bouncing around the 61.8. So as long as you know, okay, from a swing standpoint, from this very moment here, is there different colored candles being formed as it goes down to break 61.8? Yes. Therefore, my entry needs to be at the 61.8 as standard. That's standard, right? So that's how it would be. Now let's see what price does. As you can see, it taps us in. Yes, it goes to the 78.6. That's not the problem. Because as you can see, we would have suffered from a little bit of drawdown. How many times does that happen? Right? And just for you specifically, I want you to pay attention to what just happened. You see how it just touched the 78.6 because you think that there's structure around this area here. You're not wrong to say that there's structure here. I'm not saying that. I'm talking about entry. You think because there's structure here, your entry should be all the way over here. But what would happen if price was to skip you? You want to get into a position or a habit where it's like, okay, you know that you should be entering from here. And even if you suffer from a little bit of drawdown, you know that the trade is always going to be in your favor anyways. Why? Because you followed a set of rules. Not because you were trying to get the most sniper of sniper entries as possible. Because if your entry was here, where would you have put your stop loss? You would have probably would have put it here, right?
Yeah, I would have put it about there. Yeah.
Okay. But then the whole point of this is not to get a 1 to 5 or a 1 to 4. So, you know what I'm saying?
Yeah, you're saying I should just put it at the 61
You should,
on the third.
if you can see that there's multiple different colored candles being formed as it finally breaks the 61. Remember, the wick doesn't count as a break. There's a candle closure that counts as a break. If you see multiple candles being formed as it goes to break that, sorry, multiple different colored candles, right? Because so imagine if it was just imagine if it was just all one colored candle going down. Then you would be right to say, yes, my entry would be above the 61.8, 100%. But until we get there, until we find something like that being shown, then I can't show you that, right? But you want to get into a habit where it's like, okay, you just keep it mechanical. You don't need to be thinking about it. You can see that the different colored candles being formed, right? Because you're not colorblind unless you trade black and white, right? And even if you do, there's obviously I'm not disrespecting anyone, but as you can see, there's different colored candles being formed, so you already know, okay, for a fact, yes, my entry is going to be here. Doesn't matter if I'm going to be suffering from drawdown. Once you get into the habit of realizing, okay, there's going to be drawdown, okay, it is what it is. It went nowhere near your TP. Sorry, it went nowhere near your stop loss. So that's all that matters. It went nowhere near your stop loss. So you are solid, right? It tapped you in, suffered drawdown a little bit, and it came straight out of drawdown. After it came out straight out of drawdown, what did it do? You went to break even, you moved your stop loss to break even as price crossed the 38.2, and price never came back towards your entry, and it went straight to TP. Once you keep it as mechanical as possible, I'm telling you, you will stop this habit of like trying to find the most perfect area. That's how you prevent yourself from taking or missing trades. Once you just keep it mechanical. Um, where would you enter if it was A plus and only tapped 3R, bro? Yeah, I've got 3R. Where would you enter if it was A plus and only tapped the 38.2? If price only came back, so if the initial impulse only came back to tap the 38.2 and never came back into the box, that's not an A plus setup. An A plus setup would be price coming back to the 38.2 and that structure box, right? Because that's that low, that's that area. So basically, that was like a support area turned into resistance. Because I'm looking to sell this. That's an A plus setup. If price came back to to tap into the 38.2 with no structure area, whatsoever, right? That would be considered a C setup. But those kind of setups, as you can see, has not happened yet. The only setups that has happened so far, which is probably about, I think, two setups so far just now, which is literally the only ones that have happened is the A plus, A, and B. Those are the only setups that have happened so far. So that's why, in the beginning when I was like, oh, there's gonna be some setups that don't even show up like maybe once every 3 weeks. And then the probability of that happening is literally zero because every time it shows up, it's going straight to your stop loss, or there's not even a room for you to enter the trade. Then it's pointless for you to even think, oh, let me take a C setup. 1W, one break even. Yeah, so what we're not going to do is we're not going to count the break evens. We're not going to count the break evens, right? Because it's pointless. We want to see something, because again, as I said, there's going to be some traders that don't move their stop loss to break even. So I'm only going to count the ones that are still valid, right? So forget about that break even one. We can actually just call that 2 wins straight off the bat. Yeah, but the whole point is to show you which ones have a higher probability. So we're not really focused on break evens at this point. It's literally just how many go straight to TP during the pullbacks, right? So whether it's an A plus pullback, an A pullback, a B pullback, or a C and D pullback, right? Those are the ones that we're focused on. We're not really focused on like break evens and even the ones that give us those pullbacks but still take a loss. We're not focused on those because we know that there was clearly something wrong with those kind of setups, right? Because otherwise, if I started counting the ones that hit stop loss, trust me, we'll be here forever. So we'll move on to the next. Right, so we've got an impulse, we've got a correction. That's all one color correction. This is probably going to go higher. Yep, there we go. Impulse correction. Let's see what it does. So there we go. That went straight to TP. Yep. Impulse correction from here to here. Yeah, that went straight to TP. Okay. So now with this one, what we're going to do is let's see where that pullback landed. As we can see, we broke this high over here, and we also broke this high over here. So technically, my impulse or my structure box can cover this and this at the same time. I don't need to draw two separate areas. So as you can see, impulse broke the resistance area, pulled back, and we're now expecting this to act as support. Will we be able to see this recording? Yeah, I'll post it. So this impulse was acting as resistance, as you can see here. Price hesitated to break it, finally broke it, broke out of it, pulled back, acting as support. So we're expecting this to now take off in our direction, right? Now, with that being said, obviously we still have to measure the first impulse and correction. As we can see, impulse correction, second retracement candle. What did it do? It tapped into the 38.2, and what did it also do? It also tapped into that structure area, right? So that's a strike against an A plus setup. Now, obviously, we still have to determine all the other setups as well. What did price do? It created another retracement. Well, technically, it's not a retracement candle, but you can say price still retraced, right? Because obviously, this is where the candle closed. Price came down before closing back up above. So you can still call it a retracement candle if you want. But what did it do? It still tapped into the 61.8. And because it's still inside the box, someone's mic is going off. Who is that? Okay, I'll just mute them. Because it's still inside that box, we will still mark it against the A setup, which is the one where it taps the 38.2, the 61.8, and the box at the same time, as we already know. In order for it to touch the 61.8, it must have gone past the 38.2, which is obvious, right? So that gets a strike against the A setup, right? So that's A plus gets a strike, and then A gets a strike as well, right? Do we have any more retracement candles? At this point, obviously, once we adjust our fib, we do not have any more retracement candles because from this point, right, from this very moment here, price does not give us any more wicks lower than this point here. Now, if I go to my entry time frame, Javar, I know you're still here, bro. Let me ask you this question again. I'm not singling you out. You just asked a good question, which I'm sure others will probably get confused about as well. So let me get rid of this one. Okay. Now, from this very point here, this white candle, because obviously, as you can see, that has a lower wick than this candle here, yeah? So this is like the last wick from that retracement. At this point, if this candle broke the 61.8, as we can see now, right? That's the candle closure above the 61.8. Where would your entry now go?
Well, it'll be at the 61.
Exactly, bro. That's
Yeah.
it. That's it. It does not matter about how this candle closed. Bro, a break is still a break. By all means, if you really wanted to wait, because this candle technically went all the way up here and then decided to come back here. Yes, you've got like a upside down hammer, which obviously indicates selling pressure, right? So you're probably thinking after this candle, price is going to come back down. Yeah, of course it's going to come back down. But then by all means, if you wanted to wait for another candle to close above this candle, or just give you another bullish candle, basically, to kind of give you confirmation that, yes, price has officially broken the 61, you could wait for that. However, what will happen is you wait for another candle, that other candle that you've now waited for would have already retested the 61, would have tagged you in the position, would have taken off, you would have been in profit, and then the next candle you're waiting to probably pull back. So let me draw it so you can probably visualize it. So let's say you're waiting for this candle to form, right? This blue candle, you're waiting for another bullish candle. This blue candle would have already tagged you into the position, takes off, closes here, right? Now you're waiting for the next candle after this to pull back here before going higher, right? But guess what? Because it already tapped this one here, the next candle actually does this. Now, at that point, if the next candle does that, is there any way for you to enter? If you already know that you move your stop loss to break even after the 38.2, would you even bother leaving your pending order there, or would you completely just leave it? If you know the strategy, right? Because you should know the strategy. Leave. Exactly, right?
Just leave it.
Exactly, because you don't want to chase it, because you already know the rules. If price leaves you as it breaks, as it goes to the point where you have to move your stop loss to break even, you leave it. You don't chase it. So that's it. So now what will happen is, as you can see, price came back. Yes, right? As I said, price had after this candle was formed, which is an upside down hammer, which indicates selling pressure. Yes, price came back. You're in drawdown. Drawdown is going to happen. Yes, it tapped the 78.6. Yes, it came back to the 88. Guess what would have happened at this point? You would have got stopped out, but that's not a problem, right? Because getting stopped out is part of the game. You also need to remember, not everyone in the market, in the entire world, is an EMC trader, right? Orders need to be filled, people need to get stopped out, and people need to hit TP. That is the entire way that this whole trading thing is played out, right? Where EMC traders get stopped out on the first position, the second position, SMC's traders on the. So if we get stopped out on the first position with EMC, we take our second position, which our heat TP now gets hit on the second position. SMC traders, right, which is like smart money concept traders, Their first position hits TP, which is where we hit our stop loss. So we were buying, they were selling. They hit TP, right? Second position, they try to sell again, but then we as EMC traders take a buy and we hit LTP. SMC traders take a loss. It's part of the game, right? The whole point of this is to make sure your directional bias is correct. You are not always going to get the most sniper entry ever. Impossible. It's impossible. Yes, our stop loss got hit. That's not a problem. Has structure been broken to completely invalidate the position? No, it hasn't. And I know that because this is the whole point as to why I draw these boxes, right? If price was to create another wick, let's say it created another wick after this candle. Let's say if it created another wick. What would I do at this point? Technically, structure hasn't broken, right? Now you have two options. If you want to be strict and say, okay, we got stopped out of the first EMC position, I'm no longer looking at this because I want all the candles to be one color, right? In terms of like the impulse of correction. Because as you can see now, what's happening is you have the impulse correction the impulse going in one color, correction coming in one color. The next impulse that goes to hit our TP should probably be all one color, or it will be several colors, but as you know, it will go towards our TP. At this point, because we've been stopped out now, it's different colors. You have a choice to completely leave this position because it's different colors, or because you know that structure is holding, you can actually move your fib from here to the new wick and then just wait for price to break the 61 again because you know structure is holding within this box, this blue box that I just drew. You could just wait for price to break that 61 again and then you get in for the retest, right? Obviously, that's not what happened there because I drew a wick. That's what happened, right? But actually, it would have been like this. So, let me replay that so you can see it again. So, yes, we got stopped out of the first position. Guess what? You just wait. Structure's holding. It like if you realize that, okay, we're gonna get stopped out, you get stopped out. It just means that directional bias, you're still 100% correct. But in terms of like the timing of entry, that was wrong. But it's not something you can change time and time again. As long as you keep it mechanical and you realize, oh, okay, like our timing was incorrect in that very moment. Our timing was incorrect for like what, one day? That's Tuesday. We got stopped out when? Literally a day after. And then what, less than 12 hours later, we have another entry. Are you not going to take that? Or are you just going to come like walk away from the market? You got tapped in, right? Now, funny enough, perfect. Now, this is a trick question. Javar, where would you put your entry, bro? After getting stopped out and price broke the 61.8, where would you put your entry? If this is the candle that broke the 61.8, where would you put your entry?
I would still put it at a 61. Yeah.
What's the reason for that? Away from you seeing prices stopping at the 61, what's the reason behind it?
Well, I'm just thinking of what you said before, that it's mandatory. So even if it does come lower, hitting the 61 is pretty much guaranteed at this point. So I just put it at
Okay.
a 60.
But then, what's all of this? All of these candles that I just highlighted in red. What's that?
Well, all that is structure, I would say.
There you go. So that's actually the reason as to why you leave it at the 61. Because resistance turned into support. No, that's that blue box. That blue box is resistance turned into support. So that doesn't matter at this point. I'm talking about just these candles here. Yes, we got stopped out the first position. Price broke the 61.8 again, right? And it just looks like there's no structure being formed as it broke the 61. But then also you got to remember, you got stopped out of the first position, but there was structure being formed on the first position. So yes, we broke the 61 again. Was the structure being formed with the first position? Yes. You got stopped out on the way of price. Sorry, on the way of price stopping you out was structure being formed. Yes. Now that price has got the 61.8 again, was there structure being has the structure been formed? Yes. So your entry goes at the 61. It's as simple as that, and that's why price stopped at the 61, no lower than the 78.6, right? And then took off. Came back. Yes, stopped out at break even. Is what it is. Not a problem, right? We're not counting the break even, so we don't even care at this point. No, this can just disconnect me from the server. There we go. Should play out now. Right? There we go. After losing the first position in terms of like actually getting stopped out, did we not end up going towards TP? Yeah. But then the whole point of what I'm trying to get you to visualize is forget about getting stopped out, forget about going to break even. Which pullback from the EMC, right? Because some people don't know how to identify which one is too strong of a pullback. Which pullbacks have the higher probability of playing out, right? As we can see so far, straight away, the pullback so far that has actually played out are either the A plus or the A setups, right? Which is and again, I'll explain what the A plus is. A plus is price pulling back to the 38.2, and that box or the structure area, and then also the A setup, which is the one that pulls back to the 38.2, the box, and also taps the 61 during the pullback. Those are the ones that have like the higher probabilities. That's the whole point of what I'm trying to get you to show you. When it comes to getting stopped out at break even and hitting your stop loss and all of that jazz, that's all of those extra stuff, right? That obviously you'll anticipate taking a trade anyways. But then again, the whole point of what I'm trying to show you is take the ones that have a higher probability because you know that they have a higher probability. You're not going to take a D setup that only shows up once every 2 months. And every time you take it, you can't get into the position because it takes off, right? Or every time you take it, it goes straight to your stop loss. You're not going to take that because that's unnecessary risk. When you have some sort of criterias, right, behind it, and again, this is just a way to show you like which pullbacks are stronger than others. When it pulls back to the 88, it can still play out, right? Which is like a B setup. When it pulls back to the 88, it can still play out. But it's the what's it called? The level, the win percentage basically behind it is like half of the A and the B. Sorry, the A plus and the A. So you don't really want to be taking anything that's like an A that's less than a B, right? Even though the B is still shit, I'll be honest, it is still crap. But you don't want to be taking anything that pulls back to the 88. I've got the 78.6 here for something else, so just ignore that, right? But really, you want to be taking things that is between the 38 and the 61.8, and you'll see that. Hopefully, if we can get through this quickly. When is it? So we're in May right now, so we're fine. So, Ronnie, that was how many we got now? I think that's another strike between A plus and A, if I'm correct. Yeah. Okay. Now, funny enough, we actually missed one. There was another one right here. So whilst we were focused on the original position, there was another one that actually just formed, right? Because we were still in the first position. So that was this one, which is the first one here, right? That was that one that we just did. The second one was actually this one here, impulse correction, which is here, trade 3. Yeah, so we've actually got trade 4 now, bro. I just seen it just now. So this is trade 4 here. So impulse correction, right? Now I'm gonna mark the impulse correction. Now you can see the impulse and the correction. The correction pulled back to 38.2 and the box, right? Did it pull back to the 61.8? No, it didn't. Did it pull back to the 88? No, it didn't. Did it pull back to the 38.2 only? Nope. Did it pull back to the box only? Nope. So therefore, this is a strike against an A plus setup. And we know that because after we move our fib, it goes straight to TP, right? Boom. Did it allow us to enter the trade? No, it didn't. But that's not the point. It didn't allow us to enter the trade. Price took off. But again, what's the likelihood of all of that happening? Right? Did it pull back to the 61.8 and then drop? No, it didn't. Did it pull back to the 88 and then drop? It didn't. But again, how many times does it pull back to the 88 and then drop? That's what we're trying to find out. Probabilities and the likelihoods of certain pullbacks. So this one, yes, it went straight to TP. We didn't enter the position. The likelihood of going to the negative 27 exactly to our TP. Oh no, I meant I was purposely talking about going to the 88 and dropping, right? Because you need to remember that what's the likelihood of the trade playing out in your favor, and what's the likelihood of also the trade not the trade not playing out and not going in your favor. That's the whole point of what I'm trying to show you. So it works both ways, but I understand what you're saying. But either way, like as you can see, it didn't allow us to enter the position. That's fine. That's not a problem. Did it go towards our TP? Was our directional bias correct? Yes, it was. That's all that matters, right? So that's still a strike against A plus, because in hindsight, during real market conditions, you would wait for price to so you would have marked it up. You would have waited for price to break that 61.8. And then on top of that, you would have definitely put your pending order there. Your pending order there. You would have definitely done that. And then what would price do after this candle? Because this is the one that broke above 38.2, which is where you should move your stop loss to break even. Not only that, it went straight across the zero, right? So at that point, it's like it's too far, right? You would have cancelled your pending order. But in real time, you would have put your pending order there. So that's what counts. That's what I'm trying to show you. That's why I'm not taking any of these trades, because I'm not trying to show you, oh, how much money can you make from it? No, I'm trying to differentiate between certain trades, right? So Ronnie put a strike against A plus, so that's trade number 4, and I think, well, if I'm correct, A plus is actually winning right now by maybe 1 point, so it should be like 3. Actually, no, so it should be 4 on A plus, 3 on A, and then maybe 2 on B, and then nothing on C and D. So right now, I'm just waiting for another position to play out. I hope everyone's understanding what I'm saying right now in terms of like differentiating between certain pullbacks and everything, right? 4-3-1, 1 on B. Okay, perfect. You see, B is even still low, and B is the one that pulls back to the 88. So that's how you know. Um, hold on, I think I might have just missed one. No, I wouldn't have taken that. I wouldn't have taken that one either. Actually, hold on. Did I go straight to TP? No, I didn't go straight to TP. Hold on. Let's see what it does next. It went straight to TP. Okay, so that's number one right there. Yeah, that's what I'm trying to show you. Like, yeah, a B setup can still play out, but right now, as you can currently see, out of four out of 4 trades, it's only hit TP once, right? With a B setup, and the B setup is the one that pulls back um to the 88. Now this is a resistance area. We broke above, pull back, measure our retracement. Retracement, as you can see from the first retracement candle, what did it do? It literally came into the 38.2 and the box, right? So that's a mark against A plus. It came back and tapped into the 61.8 and the box and the 38.2 as well. So that's a mark against A. And then it's also tapped the 88. So that's a mark against what's it called? The B setup as well, right? Yes, the wick is outside of the box. That's not the point. During the retracement, did the retracement come into that box? That's what matters. Yes, it did. So therefore, A plus, A, and B all should have a mark behind them, because it all went straight to DP as well, and the criteria was hit. Yeah. So at this point, the retracement, as you can see, is too strong. Does it still work out? That's what we're trying to find out. So that's where we now put our fib. I don't need to go to the entry time frame. Actually, let's go to it because I want to see something. Perfect. Jabal, you still there? Yeah, you're still here, bro. Let me know if you can hear me. No, no, Jabbar. I'm talking to Jabbar specifically.
What was that, bro?
You can hear me, yeah?
Yeah, I can hear you.
Okay, perfect. Now, remember your question about putting your entry at like the 78.6 because you're thinking that the structure is all the way down here, right?
Yeah.
Okay. Now, from this very moment, I finally found a position, by the way. So from this very moment here, where the bottom of the fib is, right, from this white candle, because that's where the lowest part of the wick is, from that very moment, is there structure being formed? So is there different colored candles being formed on the way up to break the 61.8? From this very wick here. So
Mm-hmm.
from this white candle, all the candles to the right hand side, is there different colored candles as it breaks the 61.8?
No, from the white candle, I'm seeing all blue
Thank
candles
you,
going
bro.
up.
Exactly. So at that point, what do? Your entry is no longer at the 61.8, right?
Well, it's
Cor-
closed above the 61, I'm seeing.
Yeah, so it closed above the 61, but since there's
Mhm.
no structure as it broke the 61,
Right.
where do you put your entry? Would you still put it at the 61?
Oh, okay, okay, okay. I put it at the structure, where structure is, which is where
Okay,
the color changes, yeah.
which is where? Here?
Now I would put it below where the,
Here?
yeah, right there at the,
No, but
um,
what about your entry? What about your entry? Where did your entry go? That's what I'm
um,
asking. Not the stop loss, but your entry. Where do you put your entry?
on my entry. Because if I look to the left, I see a color change. Most of the candles there, so I'd probably put my entry somewhere in line with there.
Okay. Now you do realize the market is not always going to present you with some sort of, I would say, this is like a perfect scenario of like structure and color changes. The market is not going to present you with something like this 100% of the time. So that's why you don't need to rely on that. If you keep it mechanical, there's two entry types. One of them is when from the very bottom of the fib, do you see different color candles being formed as it goes to break the 61.8? If that's a yes, then you know its structure, then you know your entry should be at the 61 at all times. Doesn't matter if you're in drawdown at all times. Yeah. If there's no structure, like now, for example, from the very bottom candle, from this candle here, the lowest part of the wick, to the right hand side, do you see different color candles being formed as it breaks to 61.8? If the answer is no, which in this case is no, your entry, it usually is around the same place, but it's only in the same place for that very trade. So usually you put your entry wherever it needs to be. Your stop loss is always at the bottom. So the very end of the fib. Your TP is always in the same place as well, right? So the only ones that stays the same is your TP and your stop loss. If I put my entry, let's just say I decided to put my entry here at the 78, right? If price hits TP, what do I walk away with? 4.93, right? But the whole point of this is to get the 1 to 3. So therefore, my entry will always roughly be around the same. It's literally a few pips below the 88. Sorry, below the 61.8, which is like this. So usually it will always be like this. But there's no way for you to say, oh, every single time price is gonna be like, like for example, as you can see here, this is the 78.6. If if you knew price was always gonna come back to the 78.6, you would always say, okay, since there's no structure formed, my entry is always gonna go at the 78.6. My TP is gonna be negative 27. My stop loss is gonna be 100, the very bottom, yeah. But as you can see, when we go to get that 1 to 3, is there a Fibonacci level in line with this entry here? Do you see a fib? There's no fib level here, is there?
No.
There you go. So that's why you try and keep it 0.68 roughly gives you No, it doesn't. It gives you zero. Sorry, a 2 to 3. Not a 2 to 3. What am I saying? A 1 to 2.3. If your entry goes at a 61.8 and your stop loss is at the very bottom there, your entry is literally a 1 to 2.3. So it's not really a 1 to 3. But my point is, as to why I'm talking about whether there's a Fibonacci level here or not, is because you don't want to have it where it's like, oh, price doesn't always come back to the 78.6. So why do I keep putting my entry there? But you know for a fact, if you just move your entry a few pips below, which is always going to be roughly around this level here, but the only way you know it's going to be here is by moving your stop loss to the exact same area as it should always be, and moving your TP exactly where it should always be. You know your entry is always going to be wherever it needs to be, which is there. And then what does price do? It comes down, it teases you a little bit, boom, entry. Yes, it came back to the 78.6. How many times does it do that? Not all the time. So therefore, you don't put your entry there. And what does that do straight after? And again, I'm not talking about the break evens or the stop losses, yeah, because at that point, definitely somebody would have got in again. The whole point of what I'm showing you is, does it play out? How many times does it play out when it pulls back to certain levels? That's the whole point of what I'm showing you here, right? And that goes to everybody. But Jabbar, do you understand what I'm talking about when I say where's your entries when there's structure and when there's not structure?
Yeah, I kind of understand with the 61.8 being mandatory on if there's structure leading up to the 61,
Exactly. It's
you know?
always from when it's leading up. Always. That's the best way for you to remember it when it's leading up. Because that little drawdown that you suffered, look, you didn't draw. I'll tell you how many pips that was from your entry. That little drawdown that you suffered was 20 pips for a 40 pip stop loss. It's less, it's like less, it was even less than half. It was like 19 something, yeah, or 20. It's like half, it's nothing. It was in drawdown for what? One, two, how many hours? Less than 16 hours. It was in drawdown for. As long as you know, okay, you're good. You've got a mechanical what's it called? As long as you know you're good and you've got a mechanical system in place, you don't need to worry about anything. You don't need to worry about drawdown. You don't need to get the most perfect entry possible. You want to be consistent. That's why I'm showing you these things. Because as long as you know you're consistent, there's nothing wrong with price hitting your stop loss. Yeah. So I hope that makes sense now. Because if I come across another setup and I ask you a question, I hope you could answer it. So that was a strike against. This is what I was saying. Yeah, you have an entry, use of structure. What was that? 068. Oh yeah, you're yeah, I know what you're talking about. Yeah, I don't mess with random fib levels though. But I guess you decide to work it out. That gives you a 3R. Yeah. Yeah, see, that gives you a 3R, but also what I just did just now was like an easy way to do it. Your stop loss and your TP always goes in the same area. Your entry will be wherever it needs to be, as long as you know that you're gonna get a 1 to 3. Because again, having a 0.68 on a chart, I guess it depends on what that entry level, like literally that entry level and on the 0.68, it's gonna differ from each pair and also how big of a move the first impulse already is. So sometimes that 0.68 might even be a hit or miss. Technically, it should be a hit because um it's actually above where you would enter if you didn't have that if you didn't have that 0.68 in the first place. But I hear you. All right, so we've got new impulse, we've got new correction. This should no, that's gone straight to stop loss. Uh, yeah, I'm just waiting for a new position to play out. Ronnie, how many is that? That last one I showed you should have been a strike against. How many was it? That should have been a strike against A plus, A, and B. So that should be 5, 4, and 2 now, if I'm correct. All right, cool. So right now we're in February 2021. So we should be moving through this very quickly. Fingers crossed. I missed another setup. There was another setup right here. I'm so done. Did you guys hear that guy snoring? All right, so there's another setup here. Impulse correction. What did it do? Yeah, there's someone snoring on this call. So we got an impulse, we got a correction, right? From here to here. Yes, it pulled back to 38.2, pulled back to that box again, right? So that's a strike against A plus. It's also a strike against the A because it touched 61.8. And this is where zooming in now comes into hand, comes in hand as well. As you can see, the wick was very close to the 88, but didn't actually touch the 88. So therefore, we are not counting it, right? Because that pullback isn't as strong as it would be if it touched the 88 and came out of it a little bit more. So this is only a strike against the A and the A plus and the A. So that should now be 6, 4, and 2, if I'm correct. So here we've got entry. Javal, from this very moment here, from this 642, yeah, perfect. So from this position right here, bro, this one right here, as price goes
Yep.
to break the 61.8, is there different color candles being formed?
Yes,
Remember, from the right hand side,
yeah, there are different color
yeah?
candles.
And the only one that we're looking at is this one here. So therefore, we already know that there's structure in this area here, right? And again, I don't need to draw boxes like this and say, yes, there's structure here. I don't need to do that. I can see that. What I need to do is identify from the very moment, from the very last point of the wick, whether I'm buying or selling, the highest point possible or the lowest point possible. From the right hand side, because you remember candles always formed on the right hand side, yeah? Is there a different color candle or different colored candle on the way up to break the 61.8? Is there different color candles being formed? Yes or no? If it's a yes, entry at the 61, no matter what. No, this is not an A plus setup, Arun. This is a B setup. No, sorry, just an A setup. Sorry, this is just an A setup alone. The reason why I said market against the A plus and the A is because it still fits the criteria of an A, but it actually goes down to an A because it didn't stop at the 38.2. It went down to the A setup. So the whole point of what I'm saying is if it stopped at the A plus, it would still count. So that's why I'm still giving points to the other setups, even though it didn't stop there. Does that make sense? So I'm just giving you like probabilities. That's how you would mark it out. So Javal, yep, as you can see, you put your entry at a 61.8, right? And again, you see how it never came down to the 78.6. Yes, you would have suffered drawdown by like a few pips. It is what it is, right? There was at this point, break even, price came back down, would have stopped you at break even at the 61.8. There's nothing you can do. It's as simple as that. Yeah, maybe someone would have re-entered again, but it is what it is. Um, so now that one, that's a mark, Ronnie, that's a mark against A plus and A. Now this was the impulse. Who was that? Jamal?
Yeah. So if it stops at the 50, is that still an A or A
That's still
plus?
an A. Yes, it's still an A because it hasn't touched the 61.8. Oh no, hold on. 50 is above the 61.8. So it will still be an A plus.
A plus? Okay,
Yes.
okay.
Yeah. So as long as it doesn't touch those fib numbers that I mentioned, so an A plus would be 38.2 and the box. An A would be 38.2, the box, and the 61.8. So it has to touch. If it doesn't touch, it doesn't count. So that's why, the other one that was very close to the 88, but it didn't touch the 88. That's why I didn't count it as a B setup because it didn't touch the 88.
Okay, got you.
Yeah. So now this would have been a reversal. Yeah, but I'm not taking that because yes, we did break this low, but then as we broke the low during the retracement, price broke above that box. The box would have been drawn like this. So as you can see, price pulled back and immediately broke above it. Right. So I wouldn't have taken that. Now this one, let's see if it hits TP. It doesn't. Uh, Technically, let's see what it does. Hold on. Okay. Now, yeah, no, definitely I wouldn't have taken this one anyways, right? Because as you can see, not only did it pull back to the 88, it went past this wick, right? But definitely, this would have been, sorry, this would have been one of those weird setups that you wouldn't have taken. However, if you wanted to take it in terms for like price action, right, where you're looking at wicks and you're realizing, oh, prices respect in this area, then that's something you would have taken by yourself. But if we're talking like strictly, you want to take A plus setups, A setups, B setups, that's not something you will take. That's a white candle, so I can't look at that. So right now we are in April 2021. We should be zooming through this. I don't want to take too much longer, so I'm gonna try and zoom through it. I hope you guys understand what I've been talking about so far, so I don't have to stop and answer questions, but I'll still walk through it. So let's just see what happens. Okay, we've got an impulse, we've got a correction, we've got straight to TP, pulls back. Yep, we've got straight to TP, perfect. Okay, so at this point, where's that box? Box would have been drawn, so there's a low here, not only there. Okay, that's the only box. Actually, no, there's another one here. Yep, technically this one here. So you draw like that, get rid of the first one. And what I'm doing there is I'm also marking other lows that it broke, matching it with like the highest point, basically. That's what I was doing. So it's just easier rather than having like multiple boxes in the same area. Um, so now we have an impulse. In a second. So we have an impulse which is from here to here, as you can see, right? So now this one, as you can see, what did it do? It pulled back to 38.2 and the box. Did it touch the 61.8? Give me the call for a sec, bro. No worries, bro. I'm still here. Yeah, so did it so it pulled back to the 38.2 and the box. Did it pull back to the 61.8? Nope. Did it pull back to the 88? Nope. Did it pull back to the box only? Nope. Did it pull back to the 38.2 only? No, it did not. So therefore, what would this setup be? Just based on the pullback, what would this setup be? Anyone? A plus. There we go. Right. So then this gets a mark against the A plus setup, and it doesn't get a mark against anything else. So Ronnie, mark this down as an A plus setup, please, bro. Right, and we already know we go straight to TP, so therefore I don't need to worry about my entries because I've gone over those already. And funny enough, there is actually another setup over here, which I just seen just now. We have a break and we have a retest. This long wick would have been more of the retracement. But as you can see from the very first retracement, it touched 38.2 under box. The second retracement obviously is standard. So this one pulled into the box and the 38.2, so A plus straight away. Um, this other candle, this is still part of the retracement because price went up before it came back down. So this one touched the 61.8, so that would have been a mark against A plus, the A, and then also what did it do? Pulled back into the 88 as well. So that's a mark against A plus, A, and B. Did it go straight to TP? I think it did, if I remember correctly. Yes, it did. There we go. Right. So that's a mark against A plus, A, and B, right? For that one. So that's another trade down. Okay, we've got an impulse, we've got a correction. That's over with, so we're not taking that. Impulse correction again, that's over with. We're not taking that. Impulse correction. Yep, there we go. Nope, we're not taking this. Nope, I'm not taking that. Impulse correction. It's a shame that one didn't go straight to TP. Oh, that was another one right there. I didn't see it. Did it go to TP? Yeah, it did. Finally. Okay, perfect. So we got another one. Impulse correction. Right. There we go. Impulse correction. We've got our box, which is here. Right. Impulse correction. Now, you guys are probably thinking, how is it possible for price to pull back to 38.2 and not the box? So just the 38.2 only. This is how it's possible to pull back to 38.2 only. As you can see, the 38.2 is actually further away from the box. And the majority of the times I've shown you just now, the 38 was actually in line with the box majority of the time. There's going to be times where the 38.2 is actually away from that box. So this is very much possible. This is where the 61.8 actually comes into play, where you can still take A setups instead of A plus setups. Because A still has a higher probability than a B setup, but nowhere near as good as an A plus setup, right? Well, actually, no, it's not too far behind from an A plus setup, actually, tell a lie. So this impulse, yeah, correction from the second retracement candle is the one that actually touched the 38.2, because you can see from the first one here, it missed it by like 1 pip, right? So second retracement touched the 38.2. And now this one doesn't go down as the only, because as you can see, the retracement candle also pulled back into that box as well, right? So this goes down as a mark for the A plus setup, number one. Not only that, well, actually, that is only that, because you can see it still didn't go to the 61.8. So this one actually just gets a mark down for the A plus setup. So Ronnie, mark that down, please. Let me know what the score is as well, please. All right, impulse correction. Nope, not taking that. By the way, all of these numbers that I'm telling you and everything is 963. Okay, perfect. So nine. Yeah, Randy, thanks for keeping touch. So nine is, could you define briefly an impulse correction? An impulse is, okay, so this is for the EMC, right? Because if you're asking that question, and I guess you're not familiar with EMC. An impulse for the EMC is you want to see one or more candle push up or down, depends if you're buying or selling, right? But you want to see it break a level of structure, right? In that given direction. One or more candle. And that candle has to be the same color. So something like this, for example, see how we got this candle here going down, this white candle? That's a bearish candle, that's a bearish candle, that's a bearish candle. That is considered an impulse. The correction needs to be a minimum of two or more of the same colored candle, not the same as the impulse, but the same as the retracement, right? Because the retracement will always be a different color. So it needs to be two or more retracement candles, right? If it's blue, so the first retracement candle is blue and then the second retracement candle is white, it's not considered as a setup. It needs to be, the retracement needs to be a two or more minimum retracement candles, right? And if you're not familiar with this, go into the course content and look at Brian's look at Brian's course. And if you're not familiar with that, go back to my profile and then just click on there's a YouTube link. Just click on it and go for it. I've got videos there as well on this. So as you can see, since this is our support area, which is now should turn into resistance, or we were hoping for it to turn into resistance, this would have been an impulse that broke that structure level. And we're hoping for price to pull back into it to then take off from that area down towards our TP. That's what is considered an impulse and correction. So I hope that answers your question. Now we're in 2022, so it shouldn't take too long. I wouldn't have taken this one because structure was broken. I'm gonna leave that. When I say structure was broken, I meant structure wasn't held. Basically, it broke above, but then broke back down below. So I wasn't gonna take that position. This one went straight to TP. I think you understand now. No problem, bro. I hope this one was a blue candle or a white candle. So yeah, that's a white candle. No, it's the blue candle. This one here, blue candle. So we're not taking it. Yeah, 963. So then 9 A plus, as you can see, is winning. 6 is right behind it, so you can take both of them. And then 3, as you can see, the B, which is the one that pulled back to the 88, is half of an A setup. But then C and D, which is literally when it pulls back to the box by itself without tapping into the 38.2, or when it pulls back to the 38.2 without tapping into the box or any other fib level. As you can see, those ones are non-existent. But it's very rare for it to happen. I'd be surprised if we get maybe 1 or 2 of those. So let's see. So I'm not seeing anything. And by the way, I only trade with fractals. So if I don't see a fractal break, I'm not taking that position. And again, all of this is just demonstration purposes. So by all means, like if you still follow these rules, you don't have to follow the break of the fractal rule. You don't have to follow that because you can actually just identify areas of highs and lows without the fractal and then possibly still take a position. But I only use the fractals. So that's what I'm marking. And I'm also not marking areas of like reversals or anything like that. I'm only doing continuations. So these numbers are only for continuations and break of fractals, right? But the numbers roughly should be the same anyways. Now this one, as you can see, we've got a break of the low over here. Impulse correction pulls back into the 38.2 and the box as well doesn't get to the 61.8. So running this is an A plus setup, as we already know. When we move our fib, it goes straight to TP, which is here. So we're fine. So that's an 8 and another one for A plus. So that should be 10, 6, and 3. Hold on, I think I just saw something. Yeah, that should be 10, 6, and 3. Um, so moving on, we're getting towards the beginning of 2023, so it shouldn't be too much longer. And at the end of this, I'm going to give you probabilities in terms of like percentages, so you can really see what it means in terms of numbers. Because if you know something has like, yes, the strategy is like an 80% win rate strategy, but if you know a certain setup has a higher probability than the others, so if you know one of them has like a 70% chance of winning, of course you're going to take the one that has a 70% chance of winning over one that has like a 30% chance of winning, for example. So once you know things like that, that's what will really help you take high grade setups. Now, I wouldn't have taken any of these because this is just choppy. So we are now in the beginning of 2023. So we are gonna fast forward all of this now. Ronnie, did you get the last one? It should be 10, 6, and 3, bro. Thank you. All right. So 2023, the whole of like the first 3 months, nothing, which is fine. You remember, you're gonna have multiple different pairs, probably like 50 pairs plus to do the same thing on. We're in May now, we still ain't got nothing. Are you going over intraday's example? I am not going over intraday examples. The whole point of this is to just show you high probability setups and the criterias for those. Perfect. Now, I think this is one that hit TP that was like a C or D setup. Yes, it was. Perfect. Yeah, it definitely was. Okay. So the break of the lows was here. From this candle here. Oops. I am not going over. Yeah, again, I'm not going over intraday examples. I'm not doing that. Boom, boom, boom. Also, well, actually, I don't need to draw that box, but I will increase it just to here because technically this is still a low as well. So I'll just cover some of it. So impulse correction. What did it do? Pull back to the 38.2 only. Did it pull back into that box? Nope. Did it pull back to the 61.8? Nope. Did it pull back to the 88? Nope. Did it pull back to the box alone? No, it did not. So therefore, if it pulled back to the 38.2 only and still went to DP, what would that be considered as? Ronnie, what was it?
See?
A C setup. Thank you, Adonis. A D setup would be the box only. It's the same thing, really. You just got them the other way around, but yeah, mark it down as a C setup, please, bro. So as you can see, broke the 61.8. Yes, you would have got stopped out of the first position. Is what it is, right? But at the same time, some people definitely wouldn't have put their entry at the 61.8. Some probably would have put it a few pips above, and maybe their stop loss all the way over here. Did it go straight to TP? Yes. Again, we're not here for entries. I'm not here for where to place our stop loss and TPs and all that jazz. We're not doing that. What we're simply here for is to identify like high probability setups. That's what we're here for, right? So we're not worried about anything else. And as I told you, look, A plus setup, 10. How many times does price give you a impulse correction and only stops at a 38.2? So far, from the beginning of 2020 until May 2023, it's only happened once, right? And even if you did take that setup and your entry was directly at the 61.8 and you took the entry at the 61.8 and your stop loss a few pips above the 88, guess what? You would have got stopped out. So if you're taking that as normal, that would have been a losing trade for you, right? Based off of you taking a C setup. But again, when we get down to the numbers, you'll know, like really and truly, you'll know, okay, let me stop taking C setups. Let me stop taking D setups. Because again, it's like not every trading day is a trading day. If you can clearly identify that you're in a consolidating market and you trade continuations, why are you trading when price is still consolidating? That market just there, right? Is clearly not for you. It's not meant for you. We've got another one here, and I think this is probably another. Hold on. Okay, no, this one actually did pull back to the box. Okay, so we've got another one here, right? This was a strange one because not only did it pull the initial impulse pull back, the correction pull back to the 38.2 on the box. You would have moved your fib from here to here. You would have gone down to your entry time frame, right? At this point here, from this very moment here, how many candles were formed as it broke to 61.8? Just one. Was there structure formed? Was there different colored candles from this very moment here, this blue candle, to the right hand side? Was there multiple candles formed as it broke the 61.8? Yes or no? There we go. Nope, 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 nope. As it broke the 61.8, from this very point here, from this very blue top of this blue candle, as price broke the 61.8, was there multiple different colored candles? We're not worried about these candles here. We're talking about the one that broke the 61.8. Was there multiple different colored candles formed as it broke the 61.8? Or was it just one candle? Yeah, exactly. Thank you. So therefore, your entry would have went where? It would have went above the 61.8. Your stop loss would have definitely gone directly at the zero, which is here, and your TP would have went there. As you can see, well, actually, hold on. Let me adjust that a little bit more. There we go. As you can see, you would have suffered from tiny bit of drawdown, right? But that was the exact area for you to enter because that area was technically structure. And it was structure because you have this entire area here. However, structure is not always going to be, it's not always going to be, it's not always going to be easy for you to identify, right? So that's the best way to do it. Is there different colored candles formed as it goes to break the 61.8? That is the best way to identify it, right? Because that's how you know, okay, where I should put my entry. Your entry would have went there. You would have went all the way down, broke even, right? At this point, in real time, I'll be very real. What day was that? Tuesday. I'll be very real. Someone would have closed out here. Somebody would have closed out. Why? Because that's a lot of money on the market. Rather than holding for an extra 8 pips. An extra 8 pips could have been $40. Are you really stressing $40 over? I don't know how many that would have been. Like, it depends on the account balance. But if we're talking like a 5K account, an extra $40, well, actually on a 5K account, that would have been an extra. That would have been maybe an extra $20, right? For a move that would have captured maybe 1%, so that's 50 on a move that. So basically, that move would have got you about $130. So are you stressing over $20 over an $130 move currently? Nope. Before it gets TP. So yes, you would have closed out there at that point, maybe. If you didn't, no problem. Guess what? Price went all the way to break even, stopped you out, right? At that point, because you saw that wick, what you would have done is you would have tried to move your fib again because you created a higher level. And again, it's up to you whether you want to try and get in for a second entry or not. As it broke the 61.8 from this point here, right? Now that entry that I showed you first time does not count on this time, right? Because we're talking about the retracement. Now we've got structure formed as price broke this area and broke the 61. So therefore your entry would have gone smack bang at 61. But at that point, price already had left you, so you wouldn't have even got tapped in anyways. Did it go straight to TP? Yes, it did. Right? And again, some people are very strange in terms of how they would have entered this one. Some would have just entered, yeah. Either way, it still counts, right? Because some would have just done some fugazi stuff. What was that? That pullback to the 30-year punches. That was the A plus. It was a strange A plus. I'll still mark it down because that extra 8 pips, I'll be very real. I would have taken that. Me personally, I would have taken that. Right? Because you're literally 8 pips away from your TP. If you're still trading on MetaTrader, you know when price. Sorry, give me a second. If you're still trading on MetaTrader, you know when price does that thing where it gives you that green banner where you're clearly near your TP. Trust me, like you would have closed out that trade, that would have been a lot of money near your TP. Right? Not only that, did it go straight to your TP afterwards? Yes, it did. So at some point, somebody would have entered, even if you didn't get in on the next pullback of the 61.8. So this one here, for example, where was it? So even if you didn't enter at the pullback of this one here, for example, right? I know for a fact somebody would have got stopped out and it would have immediately just like as soon as they saw price coming back down there, for example, immediately they would have just hit another sell button. But that's the only reason as to why I'm marking that down. It's still like an A plus setup because really and truly, real time market, people's emotions get to them and all that jazz is the whole point of it. Directional bias and high probability setups, right? So it still counts. Impulse correction. What do we have? Prices. Give me a sec. All right, so when it ends, we just got to do January 2024, and then that will be all of it. So we don't actually have to do an entire year of 2024. Let this play out. So we're in September now, 2023. So we are good. We've got like less than 6 months, which will be in the next 5 minutes, maybe. Impulse correction, deeper for pullback. Wouldn't have taken that anyways. Now this one, I wouldn't have taken. Reason why I wouldn't have taken it, this candle here that decided to close above the area, this is the one that I wouldn't have taken. So immediately, even if I did do my impulse correction, I measured the retracement. Yes, it came back to be a setup, but it only counts as the A setup if hold on, just so you guys don't get confused, it would have only been an A setup if price did not close above this box, right? If price did not close above this box, it still would have been an A setup. I would have loved to see a wick outside of the box, because technically then it's respecting the box, and you can clearly tell it's respecting the box because it's not closing outside of that area. But once it closes outside that area, then it's a bit different, right? Yeah, I would definitely wouldn't have taken that. So I'm gonna leave that one as it is. I'm just showing you for demonstration purposes. Oof, that's me. That COVID is not cool. All right, impulse correction. We go straight to TP. That one went to TP. Perfect. So now with this one, since the impulse starts from here, I'm only gonna capture the body from here instead of here, right? Because the wick of the impulse would have been inside that body. So you kind of want the wick of the impulse to kind of be outside of those areas. So like this, for example, captures that. Does it break this one as well? Yes, it does. So we're going to capture that. Does it break this one? No, it doesn't. As you can see, when I put this line there, as you can see, it doesn't actually break that line. It wicks that line. So therefore, we're not going to capture that one. We're just going to capture this one here. And we can drag this across, right? Impulse correction. Pulls back to the 38.2 and the box. Yep, so A plus. Pulls back to the 61.8, the 38.2 and the box. So A setup as well. And it also pulls back to the 88 as well. So that's a mark against A plus, A and B setup all in one, right? Did it go straight to TP? Yes, it did. Price left you. That's not the point. Talking about high probabilities once again, right? So mark that down, please. That's another setup right there that just took off. So we're going to mark that one. Ronnie, you still here? Well, you have to be. You're marking up. Just playing with you, bro. Okay, cool. So we've got an impulse, we could work correction. Now with this one, as you can see, impulse correction. Correction pull back to 38.2 and the box as well, right? Did it pull back to the 61.8 before it took off? No, it did not. Did it create a lower wick than this one over here? No, it did not, right? So as you can see, it stopped at a 38.2 on the box and decided to go towards that TP. Of course, when we moved our fib, we definitely would have been able to get some sort of entry at some point. This one here. So now there was no structure formed as from this candle here. There was no structure formed because all we saw were just two blue candles break the 61. There wasn't like a white candle in between these blue candles. So your entry would have been lower than 61 to cover the low from here. But of course, it didn't tap you in. So it is what it is. But again, high probability. So did it go to your TP? Yes, it did. So that's another one for A plus by itself. And I think this one is another one. Did it hit TP? No, it didn't. So we're not counting that one because it didn't hit TP. Okay. So we are near the end of it. Let's see. This is January, so we should be finished anytime soon. There we go. We're finished now. So, Ronnie, let me know those numbers, please. And I want to go. I want to show you something. Not percentage change. Percentage calculator. Yeah, Ronnie, what's those numbers, bro? Initial value. No, what am I doing? Yeah. Percentage increase, percentage calculator, percentage point, percent. Oh, I know what I'm doing. Percentage in the calculator. $13, $7, $4, and $1. Okay, so I'm only gonna count. Technically, that was 13, 15. No, sorry, 14. 14 trades, right? Because remember, in order for it to be actually no, 13 A plus. Yes, I need to calculate all of them. So 13, 7, we had D, yeah. C, not D, bro. 13, 7, 4, and 1. 7 plus 4 plus 1. So we had 25 trades in total, right? If we were to take them as individuals, we would have had, how many did I just say? 25. 25. So if we had 25, we would have had 13, right? Now, winning percentage, we would have had technically, no. So ignore these losses. But what we're going to do is we're actually going to leave these losses there as it was, right? Technically, we didn't have any losses, but I guess it's calculating the losses based on the fact that we had 25 games and we actually only had 13 wins, right? Which is fair. So really, these numbers, these winning percentages are going to be much higher than what it is. But that 13, um, those 13 wins on the A plus is actually, as I said, it's higher than 52%. But if we're talking like, okay, let's just say for every 13 wins, we had 12 losses, right? Based on on a 25 games. Yes, your win percentage would have been 52, right? So that's based on what's it called? On 25 games. If you had 7 on a on a standard A, as you can see, your winning percentage would have been 28%, right? Still high, not as high as the 52%, but still high. So A plus and A is obviously still trumping everything, right? Of course, the more games and the more trades you would have taken, of course, these numbers would also be greater as well, right? But I also don't remember, sorry, also do remember at this point, we wasn't really focused on losses. So let these losses just stay wherever it is, right? Because really, if you're just taking those specific setups, if you remember all of them that we did take, really and truly, I think we probably only stopped out on maybe 4 of them, right? If that. Or even away from that. Do you know what? I'll do it like this. Let's just say we got stopped out of 4 of them out of the 25 games, but we still won 13. I don't think those numbers are going to change. Yeah, those numbers won't change. All right, it is what it is. Um, hold on, let me. All right, cool. So 13 wins, 52%, whatever. Clocking up, bro. But yeah, no worries, bro. 13 wins, right? 25 games, 52%. 7 wins, 25 games, 28%, right? And then, of course, 4 wins, right? You would have had 16%. And then, of course, the 1 win, you would have had, bro, you would have had like 4%. Again, the whole point of what I'm trying to show you is when you do these high probability setups, you have a higher chance of winning against. So put these like setup criteria against a a high win rate strategy. You can't go wrong. But if you just take every setup that you think is an impulse and correction, that's where you go wrong because you're supposed to have setup criteria and understand which setup criteria have a higher probability of going in your favor. That's where you start winning the most because you have more consistency. That's what I'm trying to show you, and that's what the whole purpose of the Zoom call was. Took a while to get there because we did 4 years on the back testing, right? But that's what I'm trying to show you. And once again, of course, these numbers will be greater, right? Especially the one that says 52%. That really should be around like 70% if it really wasn't counting those losses. The one the one win that we had on the C setup, which is the one that only pulled back from 38.2 only, and none of the other fibs and none of the box either, right? Yes, that win percentage, actually that one there, really, because it was just one win, that winning percentage wouldn't be more than what it is now, right? Because technically you didn't have enough information off of that one trade in order for it to give you an accurate reading basically. But regardless, like the number, the whole point of it, this works on gold too or just currency pairs, everything, every little thing. that C got 100% win rate. Exactly. That's my point. But you know what I'm saying? So even the ones gave you like the 100% win rate, that's ridiculous. The one, even like A plus setup, I think those ones, I think you probably got stopped out twice, right? Out of however many positions you did take. So let's say 13, well actually let's say 15, right? And then you had 13 wins and you got stopped out twice on an A plus setup. Okay, guess what? Your win rate is still 80 something percent. That's still more than the 52% that this computer thinks that we took, right? You're solid. You are literally solid. That's the whole point of this Zoom. That's what I was trying to show you guys. Because I know I posted something and some people were confused as to what the difference is and how it works and all that jazz. That is what it is. So for me personally, I only 13 out of 15. Yeah, exactly, bro. Thanks for saying that. So that's why for me personally, I only take A plus setups, A setups, and occasionally I will take the B setup, right? If it comes out to play. No, you're good, bro. Yeah, go and watch Brian's videos. It's in the course content. Brian, the strategy in itself is Brian's strategy. Don't get it twisted. I just have, I just go into it. I just go into it a bit more in a bit more detail, right? Because that's just how I am. Because yes, the strategy is simple, but trust me, when you know that there's more into it that you can possibly grab more information from it to kind of make it in a system where it's like it's foolproof and where it's like your safe haven. Yeah, trust me, you're gonna want to have all of these information, bro. Um, yeah, exactly. 86% on the A plus over 4 years is one. EMC update system. No, yeah, bro. Like every setup is not a setup. It's as simple as that. As long as you get that in your head, I promise you, you will stop taking setups that you think is an EMC setup and you end up getting stopped out because you have these criterias. Yeah, everyone's always posting, oh, AU is about to play out or NZD CAD is about to play out, and people are asking, oh, don't you think the retracement is a bit too much? Don't worry about what the other person thinks because you don't know their account. You don't know if they're about to gamble the rest of their account to try and flip their account because they've lost eight trades in a row already, right? By taking C and D setups. But if you have a system where it's like, okay, I can separate myself from what everyone else is trying to call out, and you just focus on what you see, you can't go wrong. It's the same strategy, but it's not the same people trading it. That's what separates you from one person to the other. What's Brian's last name? Savary. Savary. If you're taking a bunch of W's, you probably take a B if you've taken a bunch of L's because you don't want to take BS for sure. No, 100. Because you want to take B's for sure. 100%. But then also, you don't forget, just because these numbers over here showed you that B setups only occurred how many times? 4 times, right? 4 times is still a lot of times. But don't forget how many A plus setup occurs. A plus setup has occurred more times than A setups and B setups, and it's hit TP more than the others, right? But then how many times does B setup occur compared to C setups and D setups? You already know C setups only occurred once, right? And it was a weird setup to take in the first place, so therefore you wouldn't have taken it, but it still played out. D setups never even occurred. B setups has played out 4 times, and each time it has played out, it's gone to TP. So if you ever come across a market condition where A plus setups and A setups don't work, but then you have a B setup, you know for a fact that you can still take B setups. Why? Because it's still high probability compared to a C setup and a D setup, which is very, very, very low. So in other words, your B setup would be like the last straw. But really and truly, you want to see A plus setups and A setups. You might just take a B setup because it's just showing you what it is. It's just there. So I hope that's been helpful. Any more questions before I go? Because this is like 2:30 a.m. right now. And one thing for doing that, bro. Yeah, there's no $20. I hope you know that.
Listen,
What's up, bro?
the weekly. Are we still trying to use the weekly now that we have the A and B setups?
Totally up to you. Me
Okay.
personally, I'll be very honest. Me personally, because the weekly setups take way too long, bro. Like way too long to play out. I just focus on the dailies. I'll be very real. One thing I'll give you though, if I see a daily setup
Mhm.
clearly playing out, whether it's A plus, whether it's A setup, whether it's B, whatever it is, if I see an EMC on a daily setup, and then I go to my weekly time frame and I start marking up my higher time frames, right? And I realize, oh, as I'm marking up my weekly setup, which is literally the first time frame of my high time frame that I'll go to. If I go there and I see an impulse and correction on a weekly, even if it hasn't broken structure or whether it has broken structure, just because I saw an impulse and a correction on the weekly, I am not taking it. I'm sorry, I'm not gonna take the daily setup. I'm gonna wait for price to clear out first before I take it. Reason
Yeah,
being,
that's what I was trying to ask. That's what I meant to say.
oh, okay, cool. Yeah.
Yeah.
If I see a setup on a daily time frame and then the weekly, I see another setup, I'm not taking the daily setup. I wouldn't take the weekly setup either. I just wouldn't take the daily setup because the dailies will occur much faster than it would on the daily. Sorry, the daily setups will occur much faster than it would on a weekly. So I'll just wait for another daily setup to occur. And hopefully the next daily setup either goes in the same direction as the weekly setup or it will just be a reversal.
Okay.
Yeah, so I just try and stay away from anything that's a weekly because they take too long. But really, you wanna have like all your time frames match up. That will also get you prevent you from getting stopped out as well. Like if you're not you don't want to be too picky with it,
Mhm.
but if you know that okay, you got certain criteria for certain reasons, bro, it just keeps you out of trouble. It keeps
Gotcha.
you out of so much trouble, bro. Like I'll be very real. That signals chat every single day. Someone saying, "Oh, um, EMC intraday, um, gold playing out," and there's some of you in. Well, I hope so. I hope not. But if you go in there, if you haven't realized now, there's a lot of them that post that stuff because they want um not clarification one, but then they also want they want to confide in someone basically, right? And there's no shame, don't get twisted. It just means that they're not confident enough to be like, oh, this is for certain what it is. They posted it beforehand so that someone can agree with them. The validation, thank you very much, bro. That's the exact same word I was trying to look for. They posted it beforehand, right? Because they want someone to agree with them for them to get in the position. Next thing you know,
Yeah.
they get sucked out. Then they
All
start
right.
from square one all over again. So that's
Gotcha.
why I keep saying like if you block out that noise and if you have certain criteria and certain everything that I'm saying, I've been very real, bro. Um, well anything that I've been posting, I've been very real. There's some people that actually just don't listen. But the reason as to why I say these things is because I've gone through all of them, bro. I've gone through every sort of emotion when it comes to like EMC or just trading in general. I'm spitting everything that I've gone through back for everybody else. And again, there's no shame for anyone that's looking for validation. Everyone looks for validation from somewhere or from someone in something. Everyone's done it. Where are you gonna post this one? I'll need to review it in a bit. I'll post it in the live lab. I just need to download the video and then post it in like a downloadable link. I'll post it in there. But yeah, trust me, once you block out the noise and that's why for me, bro, I'll be very real. Brian will call out AU, I'll call out AUD CAD. I don't like AU because it's not fit my criteria, although it's the same strategy. Maybe, maybe the retracement is a bit too strong for me or too weak. No, in fact, let's just say the retracement is a bit too weak for me. Now, that retracement being too weak would be a C setup or a D setup, right? Because it hasn't pulled back far enough. But then to Brian will take it because it's still got the second retracement candle. You know what I'm
Yeah.
saying? So for me,
Yeah.
if I know that okay, C setups and D setups are have less probabilities than when it comes to A plus or an A setup, and I only want to take A plus and A setup. Who am I to tell Brian, no, that's wrong? No, it's not about that. It's about what you want to take as an individual for your own personal account. That's it. That's all it boils down to. All I find Brian's videos. Brian's videos are in the course content. If you go to the live lab, left-hand side, you scroll down to course content, right? When you scroll down to course content, you'll see Brian's name, and it's all there. Appreciate it, Richie. Now I understand what it was. Makes sense for me now. Yeah, literally all of that, bro. Like everything I'm doing, I've gone through. Like I've trust me. Anything you want, any question you want, I promise you, like I'll be able to answer it. Because I've back testing, bro. Back testing has. You don't want to know how many FX replay accounts I have, bro. Or I've made. I probably made about 20 in the last 3 weeks. And I just backtest for fun, purposely for things like this. So I know, okay, I'm not just making these numbers up. You make it look easy for us. Bro, trust me, it's not easy. It's really not easy. But once you get used to it and you know exactly what you're doing and why you're doing certain things, then it becomes easy. Because it's the same way how you're looking at me thinking, oh, this guy knows exactly what he's doing. And you're probably over there struggling, right? Or anyone else, just in general. No shade to anyone, but you're probably struggling. Bro, over time, once it becomes like repetition and all that, then you'll realize that, oh, it really wasn't that hard. Of course, it took you a while to get here, but yeah, it really wasn't that hard. So just separate yourselves, block out that noise from like the signals chat. But there's a lot of bullshit being spoken in there, bro. People calling out false information and all that jazz. I don't blame them, but yeah, I've been struggling for sure. If anyone's been struggling, I'll be very real because I go into so much details. Check my check the YouTube. Just go on the live lab, click on my name on the profile, and my YouTube link's attached there. It's the same strategy Brian's doing. Brian does it in a basic way, which is like beginner friendly, which is fair. Because obviously it's Brian's strategy, don't get it twisted. Simple is probably better. But I go into a bit more details when it comes to what I've just shown you just now, basically. Like I go into a bit more detail when it comes to it. And this detail, by the way, isn't information that's come from Brian. It's detail that I've picked up for myself and how I understand it, and it still works. And the win rate, the strategy, the way I've kind of like, I don't want to say tweaked it, but the way I've understood it and how I explain it again to somebody else, it is literally the same win rate as what Brian would have, 100%. Not 100% win rate, because obviously it's 80% win rate. I can show you those numbers, 80% win rate every single time, and it matches up.
Mini calculator. Winning percentage calculator.
What's up? What's up, Seven?
What the fuck is this?
Yo, Keynote.
What up, Rich?
Bro's out there talking to himself. You forgot your mic wasn't muted. What's up?
What
Was you asking about this?
No, I was just checking it out. I didn't even know. I was just reading the shit. That's all.
No, I was showing. I was back testing. Did you just join just now or something?
I did. Well, I had joined earlier, but my fucking tablet had died and shit, so it just came back on. Yeah,
that's fine. I'll post the video anyways. But I was just showing them when I was back testing. I got someone to write down the numbers basically of how many trades we took for certain criteria. So the whole point of the winning percentage calculator was just to get like the average of certain criteria and how many. What's the highest probability of taking A plus setup or an A setup or a B setup? The way I've kind of separated it, so it's easier for you guys to know, okay, which EMC setups are really the best ones to take, rather than just taking every single one of them. 365 or live trading lab for course content. Not 365, live trading lab. Nothing in 365. Nothing in 365. Live trading lab. Any more questions before I go? Please, 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 please. Say no. No more questions? If anyone's got any more questions, hit me up, message me. When is the next webinar? Bro, this was spontaneous. I don't know when the next webinar is. This is
You
just
gonna post it?
spontaneous.
You posting this up though, right?
Yeah, I'm gonna post it when it
Okay.
downloads.
All right, baby.
I'll post it in the next maybe like 10 hours or something. I got something to do in the morning. It's like 2:48 a.m. right now.
All right, cool. Appreciate you.
No worries, bro. Thanks for the episode, Richie. No worries. I'm out, guys.
Later.
Peace.